Hello everybody, welcome to this morning's technical analysis video for the date of Monday, the 11th day of March, 2013. Within this video, three different precious metals we'll be looking at: palladium, silver, and gold. One chart for palladium, which will be the 7-day chart, and the daily and the weekly for both silver and gold. And for the month, palladium is up about 6.25%, up significant, where everything else is fairly close to flat thus far. And for the year, palladium up about 10%, whereas gold, silver, and copper both down in the 4-ish% range. So let's take a look at these charts, starting first within palladium, going back to the highs established in early 2011, whereas silver placed their highs in the after April, so on the first third, and gold put their highs in the later part of 2011. But all these different commodities obviously went through retracement. What I look for a failed move from point A to point B, well, this is point A, this is point B, is for it to hold and stay above the 61.8% Fibonacci level. That is this line right here. Notice on test number 1, right here, it pulled back. And now what's interesting is this low was lower than this low. Oftentimes, you can have that failed move before the real move. That's the case right there. And then, obviously, we can just even see here, it pierced above it, came back, found support again. Then you made this area of resistance, which met this area here, which was at one time resistance, then became support. It became support on at least 2 occasions, just merely looking at this chart. Why at least 2? Well, it hit it on this third last candle. It hit it again too. And within the last 2 candles, this one and the last one, it found support at this mark again. So it found support twice at a significant level, and it did not make a lower high. Meaning, if we did this and pull back, okay, chances are we take it out. No, that didn't happen. We can see that we've made this higher high from the most previous one within here. So now if you could have a decent size push higher, this area that was resistance will become that of support. This area that is support, you don't want to be support again on a bullish occasion within this run. What I'm saying is a pullback is fine, but you'd want a significant higher low. 740 would be significant. And, of course, that's something to look for on, of course, the down move. Now, how do we calculate these Fibonacci retracement numbers? What we do is we take the high and we divide it by the low. And then we put it to the power of the Fibonacci percentage, then multiply the low again. So, therefore, we'll take the golden ratio, which happens to be 6.18, and we multiply it by itself. You get 38.2, then you get 23.6. If we take 1 minus 23.6, we get 76.4. And then we get 14.6. Once subtract that is 85.4%. That's the number we're going to need. So we take the high of 860.01. High divided by low. Low is 537.10. Okay, then we do the power of 854. 85.4%. Or 85.6. 14.6, 85.4, excuse me. Doing numbers in my head as I'm trying to do this at the same time. So we take that number, we multiply the low again. So the next price objective on the resistance side is in at 803, which is pretty much the same as 800. So roughly around, well, just below this line in here. So right here would be the next resistance level. So what would be ideal is a move that takes us to the 800 mark, and then finds support in here. So now going back to Fibonacci retracement, we take the 61.8%, and then, so that's where we are now. Now this one's going to be 909, or 9%. Once you get to the point of, well, that's 91 on the reverse, you know what, it's not even worth doing it, because the next support level after, or resistance level after 800 is the previous high of 860. That would be the next level right there. Now also, again, if you take a look at this low in here, notice the low from, well, you got the summer of last year here, and then you got the December time frame, and even the most recent lows obviously well above it. So the pattern's making higher highs and higher lows. If we switch this to the silver chart, There's the low, there's the low. It's not doing the same thing, obviously, and merely it's been in this large sideways consolidation. I want to talk about the volatility within this for now. Is what I do is I take the highest number, I subtract it by the lowest number to get the difference of each period and divide it by the lowest number. That to me is volatility. And the average since here is close to 8%. But quite frankly, over the last whatever amount of periods, the average has been closer to like 5%. And before here, the average was closer to like 12%. So we've had a lot less volatility within this run so far as well. We're also looking at the volume. I'm not showing it in today's chart, but I will explain it as it's been extremely high since this decline move in here. Today's volume has been microscopically small as of around 10 a.m. Eastern Time. The 18 moving average, which obviously was declining for a decent amount of time, got above it. So when you have a decent break above it, you need to come back, find support at it, break resistance. Well, the parlay didn't happen because it didn't break resistance. Thus, downtrend. Now you go down it, find resistance, which occurred. And there we are. There's a bear market, and it's made the new low again. So we're in that of a bear market. Question is, will we test the next support level of 26? Because the high volume is occurring with markets going pretty much sideways for the most part, it's very difficult to state if that is going to be the case, because it wouldn't surprise me if there was a washout low, but it wouldn't surprise me again if there wasn't. Saying another way of saying I don't know as well. Therefore, you come up to this area, resistance is huge at that point, and finding a way of making this higher low, stabilizing this thing is pretty big. So like I said in here, you need to break above that 18 average, establish resistance, come back to support the area, and then break it for a bull market to take place. That's basically what I'll be looking for. I need to see it hold and stay above 40 for me to consider this to be on the long-term time frame in that of a solid bullish state. If you're saying, okay, we're looking as if we're going higher now, then you are speculating and then getting in on cheaper prices. I guess that would be the key right there. Would be that of cheaper prices as well. Okay, daily chart now. And when we look at this, we can see that a lot of times I've been talking back in here about all these failed moves. And well, obviously, we had this situation of a fast or a big move occurring. Obviously, the big move was straight to the downside. So now what do we see? The more current analysis last week or a week just at the end of the week before that. It had made a new low, obviously, and since that point, it has retraced a little bit, but it's just a lot of choppy, sideways market nonsense, which is pretty much in a range of about the low 28s to the mid 29s. Then it's pretty much in the middle part of this range as we're speaking right now, and of course within this declining 18 average. So here's another spot where it gets above the 18, finds support, and it didn't break resistance. First thing it needs to do right now is to at least start to flatten out. It's still got a little bit for that to be the case. Let's move this on now to the gold time frame, and then again we can see here there's a lot of periods until this top, whereas on the silver weekly we're going to be saying goodbye to this high. At the end of next week, that top will be gone from the weekly chart. So that just shows it's been like 2 years, a long consolidation that's been currently in play. How much longer? Very difficult to point out again. So, big support because it's been tested multiple times down here at the 15 and a third, 15 and 2/5 level, 1540-ish area. 1, 2, 3 different tests, and really this is test number 4. It's just thus far it's a pierce above that level, and will it come down to the previous 3 time hit lows? Again, I don't know. We got this previous level of support, which is now that of resistance. So ideally what you need is to come up to this level, establish a higher low, and then of course manage to take this out and then test the next level in at around 17 3/4. finally, the daily chart for the gold price. And a lot of the similar sort of deals here. There was a situation like silver just having a straight move towards the downside as well. And the running average here, which was support, has been resistance now. As far as the next level of Fibonacci, I got 38.2 and 61.8. So the next one I'd be looking for would be 23.6. So we have a high of 1796. We have a low of 1555.1. So we'll put this to the power of a 236. Multiply the low, which means our next resistance target right now is about 1600 even, 1608, upwards to this area here as the next resistance. So what would be ideal is to make a move up towards here, come it back into the bands, let the bands flatten out, and then have a move up to this area of 1643, and that would be the most ideal thing. Of course, if you're breaking down below the new lows, that means, again, that's a test of the these levels down in here, of course, of around 1540-ish or so. And, of course, the low is 1523. So thank you for tuning in, and I'll talk to you later on. Bye-bye.